All right. Welcome, everybody, to the first of maybe daily COVID-19 updates with your favorite neighborhood accounting professionals or wannabe accounting professionals, however you want to look at it. I have here with me Dan Luthi. We'll give a wave, Dan, to everybody. Chris Macksey, Chris, Amy Walker, the beautiful Amy Walker, to add some beauty to this panel, and Jacob Schroeder, who Jacob and Dan were the mastermind behind this accounting update. This is for us to give you an accounting update on a daily weekday basis, or maybe the weekend if some of us are working, on what's happening that's going to be affecting your small business. Today, we're going to be discussing the disaster loan and the CARES Act that just passed today, signed by President Trump. So Jacob is going to be the primary guy covering today. We'll switch around every single day as you do these updates. But Jacob, why don't you take us away with, you've been the mastermind around following this. Why don't you take it away?
Yeah, so today the House signed the CARES Act. Obviously, we'd had the Senate. We've seen this bill a little bit. The House luckily didn't do any amendments to it today as they passed. So we're just waiting on Trump to finally sign it for that to go into law. So it has a lot of implications in a lot of different areas. We're going to focus on the business side today for the most part, I think. And there's some individual stimulus in there as well that we can address on a later date if we so decide. But today, I think we'll focus on the business side of things. Wanted to start off with the big provision in there, which is the 7A relief loans, or the payment protection plan loans. So looking at those are different than the loans many people have been talking about in the economic disaster area and loans. So it's a different program, different application process completely. From the application process, the one big difference that I've seen is the economic disaster loans, you have to apply directly through the SBA, where the relief loans, you can go through any SBA approved lender, which opens that door up a lot, which hopefully means some faster processing time for all of us as we get these in, and faster time to money in your pocket, which is really important to all of our small businesses, all of our clients. As we know, we are all feeling that brunt. So the calculation on those loans, it's equal to 2.5 times your average payroll for the last year. So they're looking backward and saying, we'll give you 2.5 times that. Interest rates 4% on a 10-year term. And then there's some interesting things on the forgiveness side. So they're looking at doing some forgiveness that is looking at 8 weeks of payroll costs, rent, utilities, and interest. Is that right, Chris? I know you've looked into this a lot. So I'm going to preference, as we talk to this is brand new today. We're all learning it with you. So we'll say, once again, like, to protect all of us in our license, that the advice you're getting is not paid for here. You should probably consult your own accountant and CPA or whoever your advisor is to make sure the right situation for you. But we are doing our best to educate you here. Go ahead, Chris.
Yeah, so basically what they're going to do is they're going to loan you out 10 weeks of your payroll cost, average payroll cost, and then they are willing to forgive up to 8 weeks of your payroll cost. So that means if you take the full 10 weeks, then you're on the hook for the difference of the 2 weeks. And in terms of what you can use those what you can use that money for is anything related to payroll costs, whether that's benefits or that is wages, paid leave, sick time. That will all be covered under the forgiveness clause. And then there's also mortgage interest, rent, and utilities that can also be utilized for that as well. So it doesn't all have to go strictly to payroll. And you can also use these funds for anything. It's just that if you use it for something that is not covered under that, then that's part of what would be financed.
Yeah, so just to clarify on, or to ask kind of a follow-up question, I guess, to that, Chris, to that statement you just made, is the loan is based off of payroll figures as a primary piece, but the fact that you can utilize the loan for whatever you so choose kind of plays into the difference of what's forgivable and what's not forgivable at that point in time. So do you mind maybe just giving a few seconds of clarification on that?
So I'm just trying to pull my notes exactly. So it covers, under the payroll side of it, it covers quite a few different things. It covers salary and wages. It covers commissions. It covers the equivalent cash tips. So even if they're not earning tips right now, you can pay them what the equivalent of what they would have earned historically during this period of time, or some sort of equivalency of that. You can pay for, you can use it for vacation time, the parental leave, the family leave, the sick leave that is also included in this bill. You can use it for dismissal or separation pay. You can use it for healthcare and retirement benefits, and state and local payroll taxes, but not federal.
I have a couple of follow-up questions on it. We've been hearing the last couple of days about, in order to qualify for these funds, you have to keep everybody on your payroll. What if before all of this was passed, you've got a small business, a restaurant, et cetera, that there was nothing to do, they had hourly employees and they had to let those people go? Do you know, have they talked about how they're going to address kind of that pre-period before we even knew this bill exists?
Yeah, so that's actually I would say one of the best parts of this is that there is forgiveness for any employer that's already laid employees off. Restaurants are a great example. As soon as they weren't allowed to operate, most of them laid off all of their entire workforce. They can bring them back on and they will still be eligible for that forgiveness. It is contingent upon how many people that they bring back. So if they bring back 100% of their workforce and pay them out during this period of time, you'll get 100% of the forgiveness. But if you only bring back 60%, then you would only get 60%. Sure. Roughly. The guidance on this hasn't been exactly explained, but that's like in summary how they're trying to explain it.
I think quite a few small businesses, not knowing this was coming down the pipe because it's unprecedented, they knew they couldn't pay their employees. There was no work to do. Their establishment was closed. And so they felt like the moral thing to do was to go ahead and release them so they could apply for unemployment, right? Mm-hmm. And so that's nice to hear, because you don't want an employer who was making a hard decision but trying to do the moral thing to not be able to take advantage of the forgiveness.
Yeah, I think the heart of behind this is the government trying to help the economy act as if it was still going and cover the costs of it still going. So almost pretending that the businesses were able to operate as normal during the period. Now, is 8 weeks long enough? I don't know. 2.5 month, 2.5 times period long enough to cover? For some businesses, it's too late, right? It's because even if you cover that period, it assumes that at the end of the period, will everything be reopened? Will revenue start flowing in, or will we be back in the same position where we're having to lay people off because we still can't do business? And so that's going to be, obviously, some regions of the country are going to open up sooner than others because they're hit harder than others. So that's really a really interesting challenge that we're facing and I think that behooves the business owner and the restaurant owner to decide, do I really want to reopen this restaurant and take that risk because I'm in this particular region that has no end in sight on opening up for business? Like if you're in the center of New York City or the center of San Francisco or Seattle, it might be a much longer period. So that's going to be the challenge, I think. And you got to talk to your advisor, your accountant, your lawyer, your SBA lender, your bank on whether or not taking that forgiveness or debt loan on is honestly a waste of time, as opposed to just letting your employees stay on furlough and unemployment and not disrupting their lives or thinking that everything's going to come back to normal.
Well, and I think to that, Chris noted on all the different inclusions that are gone, that they went through. So using the restaurant as an example, I mean, the fact that you can still have the ability to cover even the tip functions that were going to be based off of required wages in each individual state, provides a lot of opportunity to cover and protect those people who are concerned and worried about it. The thing that I think for me that I feel, to your point, Michael, the intent that's behind this is to give business owners the actual option to figure out a path and a plan on how to potentially recover, instead of saying, make the decision today because there's no money on the table to be able to do that, which provides a lot of open opportunity, which I think is the goal we're looking for right now, is a lot of hope. Hope that we can actually even figure out a plan and strategy, maybe do some adaptations of our business, switch to a more, again, using the restaurant example, switch to an opportunity of doing something online, switch to the opportunity of doing something more digital or anything from that standpoint. I know, I've seen customers who do training and coaching and teaching that they usually do these with children, on site, having to switch that around and evolve your organization to adapt to a culture shift that's going to change for the entire United States or the world over the coming months and years as we deal with the kind of fallout and the process of what's going on. I think it gives viability for a period of time, which hopefully will allow for us to make those, small business to make those decisions.
So Jacob, I have a question specifically, this is a secondary type of loan. Earlier this week, a lot of us were helping clients apply for the SBA disaster loan. That seems to be bigger, more encompassing. Do you know if people can apply and be approved for both? So
you can apply for both for sure. There's some confusion around whether you can get both or not, because there's a specific line in the bill that basically says there's a limitation on borrower receiving the relief assistance and an economic injury disaster loan through the SBA for the same purpose. So the question is, can you define a different purpose for those funds? And is that definition enough to get us there? And I'm speaking very blunt here yet. I don't think anybody's interpreted the law enough yet to figure out on that. The good news is you can apply for both. And if you get approved, you can always turn one down.
Sure.
So just because you applied does not mean you have to accept one and go into that program. You can turn those down. So to that point, I'm recommending a lot of people apply for both. And the flip side of that is it may come down to you're picking which one gets to you fastest, depending on how critical your operation is. And my guess right now is that we are going to be getting 7A relief loans faster than disaster loans, because on the disaster loan side, I think as of yesterday, I saw a stat that the SBA had a backlog of 25,000 of them. And from the 25,000 backlog, they're expecting 3 weeks out, right? So if you're looking at 3 weeks, that's going to become a challenge. Waiting to 3 weeks to get through those and to get it approved, and then it has to get funded, where hopefully on the 7A side with using secondary lenders, that can go a lot faster and get that approval rolled out and hopefully funds in your pocket within a couple of weeks. So I think that's going to be a driving factor for sure as well.
There's also the maximum amount factor, right? So the EIDL, the disaster loan, is only up to $2 million, and it's at a 3.75 interest rate, whereas the SBA 7A relief loans are up to $10 million at a 4% interest rate. So there is also the idea of, what do you need? What's the maximum amount you need? The EIDL also had up to 30-year requirement, and you could only apply for it if your state had been an approved declaration of disaster, right? So there was only not all 50 states had been approved yet when it came out, and as days went by, whereas the 7A, all states can do it because it's a normal 7A loan, and it has only a 10-year full payout with a 1-year deferment. So, and what's unique to that too is there's no personal guarantees on the SBA 7A. It's unsecured and no personal guarantees, and it has that loan forgiveness portion of it. So it's a higher interest rate, higher amount loan forgiveness portion. So so it is interesting the approach now. The backlog, I think I read the backlog on the disaster loan is 25,000 applications. So there's going to be a lot, and there is, I believe, there's a limited amount of money for both sides. But it seems like with the CARES Act, there's a lot bigger pool, and so you're more likely to get approved on the SBA 7 in regards to reaching the maximum, getting into the budgeted amount versus the disaster loan, which was probably eaten up by now based on the approvals.
To touch on something else, Michael, you mentioned that there's a 1-year deferment on payments. And I want to point that out. That's on either loan. Either loan can be, you don't have to make your first payment back on the loan for up to a year. So that gives you time to get this money, time to get back on your feet and go and then start moving forward before you have to pay it back. Or in the case of the relief loan, some of that might have been forgiven as well. I will say, obviously, the relief loan is driven purely upon 2.5 times your average payroll, where the economic disaster loan is a little more looking at how much revenue did you lose, what's your needs base. That calculation is a little more complex on what they're going to give you. But for certain businesses, that may mean they're eligible for more funding through a disaster loan than they would be through a relief loan, depending upon your circumstances. And that's where it really gets into, you got to talk to your advisor, you got to work through that, knowing we can get more money, but also knowing we're not going to get the forgiveness on the disaster loan. It's important to really work through those two and just understand what makes sense there from that side. There is also, under the economic disaster loan, I'm just going to touch briefly on this, there is a bridge loan that can be done through express lenders that should get to you faster. It is capped at $25,000 though. So if you're a small business, you only need a little bit, it's worth looking at that program to help get you through. And it is supposed to turn a lot faster on the express loans. Once again, with it being the SBA, it's through express lenders. I don't know what that backlog looks like or what that conversion time looks like, because we're in a little unprecedented times. So it's kind of hard to run those numbers, but there is that option out there as well for people to look at.
Any idea on the interest rates on those express loans? Is it are they kind of like the shark hire loans that you could get overnight?
I believe it's
so.
I believe it's prime plus 2.75%.
Yes.
Was my understanding.
Which calculates out at like 6% right now, I think. So yes, a little higher, but not dramatically,
crazy high.
right?
Yeah.
I think one of the questions though that we kind of prepare to ask, and that we've received from a lot of our clients, and kind of open this up to everybody to kind of give thoughts and sense on what goes on with it, is as we make these decisions on what our businesses should need or not need, and we start asking these questions of going from one loan to another, what's the best way to actually apply for these? Do we have to go directly through the SBA? Is there a list of lenders that we can look at in order to try to determine best course process? Knowing there's also some potential advanced opportunities that are available, even if you're not able to be accepted. What's the best way to go about getting, at least started down this road? Knowing there's 25,000 on the first one already pre-applied, but also with this other one, application access isn't available yet. So sure, there's probably people collecting applications, but you can't really put anything in because it's not really hasn't been finalized from that standpoint. So I guess I just open that up to giving your guys' thoughts on what you guys are seeing and what you guys are finding.
Yeah, I would say, if you've reached out to your bank and they haven't already prepared and they don't have answers, they're probably not the best partner to work with if they're not prepped to work with you right now, if they haven't been keeping updates. And so finding a bank or a non-bank lender who's SBA approved, who has been doing these updates daily, who has been keeping track of the bills, and who have built intake software or intake forms to make the process easier for you, I think is the best route. Because if your bank sends you a PDF that you have to fill out manually, or it says come to my office and fill one out by paper, to me it just seems like they're not well suited or best prepared to expedite this process for you. So I would recommend going with a lender who can expedite this for you and really walk through and knows this bill. But if you're talking to your banker and they literally have glared eyes looking at you like they have no idea what you're talking about, that might best be time to go find a different partner on this SBA loan. Yeah.
And I think that's an important point, Michael, because there's a lot of SBA lenders in the US that only issue 1 or 2 SBA loans a year, right? So there's a lot of approved lenders that hardly ever issue a loan. And when you start dropping all this on them, the rules are completely changing. It's hard to tell you what you need today for this loan because they are streamlining the application process, and they say they are removing some of those barriers. But if you want to get started and make sure you have everything, there is a 7A loan checklist on the SBA site, and you can start working through it. Things like a personal financial statement, the application that's a normal 7A. Like if you have everything ready for a normal 7A, this streamlined application process is going to be super simple for you, right? If you're applying for a disaster loan, a lot of that same information will be able to be used in the 7A relief loan application as well. So I think their request for information is going to be fairly similar in that. I'm going to obviously guess, and normally like a 7A loan, I think you need a full business plan. You need some of that stuff. You're not going to need to go to that level in this, I'm pretty sure, based upon what they're saying. Obviously, we can't guarantee anything. But if you get that, you know, the simple borrower information, the personal financial done, have your financial statements ready from your business, that's going to get you on the track to being ready when this comes available. And there are several lenders out there that have basically an application process where they're gathering things, but even they're not quite sure what they're going to need yet. So I think most of them are over gathering. But then picking your bank, to Michael's point, is going to be super important. We had a large SBA lender reach out to one of my clients, and that SBA person was guessing it'd be 3 weeks before they could take an application because they were so large. It was going to take them a long time to pivot. Where I've had another one reach out to me, and they think they'll be ready by Monday to be accepting applications and getting them approved and spitting back out. So that varying difference. And you know, the one that says Monday might not actually get there because the SBA may not give them some information that they have to have, right? But that timing difference in expectation means one's really engaged on this process and problem. And the other one is just there to process loan apps, right? And when they come in, they're not super concerned about it, not engaged with you on it. So I think that is the relief loan and the economic disaster loan. There's obviously a lot of other things in here that we can touch on. I know one that we've talked on here before with a couple people is there's a potential delay in the FICA tax payments, the employer FICA tax payments, where you as an employer, you're collecting Social Security from your employees and you're contributing your 6.2%. Well, you won't have to pay your 6.2% in. You can defer that out, and you would actually spread that over 2021 and 2022. So you'd actually be paying that in the future. So that would save you 6.2% on your payroll cost as you move forward here, which I think plays really nicely in conjunction, Dan, with your point, or Chris, whichever one you were, that when you can use this relief loan, you can't use it for federal taxes. But now we can defer that federal tax piece out until 2021, 2022, which means now you don't have to cash flow it up front from your loan. So that provision is in there. Obviously, they're going to have to write the rules on it and how it works, right? The other one I wanted to touch on, because we've talked a lot about it here recently, and I'm sure some of you guys can chime in on the sick leave and FMLA pieces of the prior bills, where these are open now. We've talked to a lot of small businesses who had a real cash flow issue with these, because yes, someone could go on sick leave and the employer got the credit back, but that took a while to get that credit because you were only getting the credit on the payroll taxes paid. So there is a provision in this bill that talks about advanced refunding of that. So you would actually get an advance check up front before you have to pay that sick leave out. Once again, though, there's currently no mechanism to do that, I don't think.
Yeah, and I think that one of the things that they had, or one of the things that's in this that is part of the eligible things to be forgiven is sick and paid time off is one of the things that can be forgiven. So I guess that is one of the things that is going to be a question is like, do you take the tax credit or do you make that part of the loan? I guess you could probably stretch out your cash flow runway a little bit more if you take the credit, if you can afford to, or can extend how much is forgiven. But yeah, I mean, that whole setup with the paid leave, family leave, and sick leave or sick time, they still haven't written any guidance on it, and that has been part of the phase 2 plan now for 2 weeks. And so all we know is that employers with less than 50 employees are the ones that are eligible for it. But other than the fact that it could put them in jeopardy. We have no idea what the other, what else they're looking for with that loan.
I also start thinking about, okay, you know, we're the accountants, we're ultimately charged with making sure these credits and things are processed right and cash doesn't go out the door unnecessarily. And so we're really going to rely on our payroll partners. And I hope their software engineers are figuring it out, because we want to be able to, my clients are already asking me, so on April 15th, when it's time to run payroll, is my portion of the Social Security tax not going to be calculated and turned in? So there's a lot that's going to happen over the next 10 days from all kinds of people.
Well, and I think that's a very valid point to bring up, because there's, you know, not only with just the payroll providers with what the federal government's processing, the states are doing some similar functions, right? I mean, there's multiple states who are offering leniency or removal or, you know, passes for a period of time and for a range that need to be addressed. And to your point, Amy, the current payroll products that are out there are not accounting for those things, or you have to create some crazy workarounds. And so I think that's something that's super important also to be aware of, that if there is a process that you can go through, or there is a resources that's available from your state level that's not being taken care of by your payroll provider currently, make sure that you have the right process in place to calculate that information correctly, to make sure that you're not putting yourself in harm's way for future, you know, for the future, or you get a bill that's setting an expectation. But also to that point too, Michael was talking about making sure that your lender has all the resources and tools and functionalities. The same thing happens with payroll processors. If you're utilizing a company who's not on the edge and prepped and ready for these types of things, you do need to be considering, do I have the right person to be doing this for me? And do we have the right provider who's going to be taking care of our needs and making sure that we're not having to do lots of extra work later on down the line because it's being taken care of automatically?
Yeah, this one's going to be messy from the payroll company perspective. I feel like, you know, if they're impounding taxes now, or even if they're not, but you're a weekly depositor and you want to take that credit back from sick FMLA, how are they calculating that? How are they monitoring if you've used enough of it? What does that look like? And to date, I have not seen guidance from a payroll company on how they're going to handle that.
Yeah, it's too soon, but it's too soon, but there are some really smart people running payroll apps, and the stars will rise to the top for sure. And now is the time we, as accounting providers, and we're loyal to these companies and bring them our clients all the time. So now it's time, I guess, to, you know, they've got to put their best foot forward and support us and support our clients.
Right. Yeah, it's just, that's where the bulk of that's going to fall. But choosing that and understanding it's going to be important for your business. Once again, unemployment versus sick leave versus FMLA, advanced credit versus later credit. Those are all really deep conversations that are very specific to you. And I'm just going to say it's even a little more complicated as you think about what your personal responsibility is to your employees, as you look at the next unemployment portion of this bill, where they increased unemployment, gave another $600 a week on unemployment to people. There's some factors in there as well. I'm just bringing that up from the fact, you know, as employers, I know we all try to do what's best and most responsible for our employees. And many small businesses, that's your family, right? And making those correct choices is really messy. And you need to reach out to your advisor and really understand those options and what the implications of them all are. And it's really hard for us to say these are the implications, because it is so personal and it's so impactful of what the different options are. I really encourage you to get in that fact. And I'm also going to bring up the fact many of these provisions allow you to bring someone back that you already laid off. So there's also the goal in there that if you did the hasty decision and like, I have to lay everybody off, in light of some of these credits and things, there's the ability to rehire somebody and apply for a lot of these items. So it's not that you made a decision, you're stuck with it. You can revisit those and relook at the decisions you made and refine those as you go forward.
So one of the questions that I think came across that I wanted just to comment on, just regarding payroll, because I think this is an important thing to factor and consider as we're going through this, is, you know, how do we let them know that we want to, you know, that this is the route we want to go down? How do we know what they're doing or not doing? If you have a specific, as a firm or as an accountant or as a small business, have a specific provider that you work with, I would immediately say make sure there's some sort of contact out to your provider, to your partner, to the person who's the manager over your account, and find out what they're proactively doing in this process. I know that there's quite a few providers that we work with who are working really heavily on this, and we're not getting paid to do any of this. So my comments come from my opinion on provider sources and things like that. But I definitely know, and I see very actively Gusto as a primary solution right now has got a lot of information that they're putting forward. They're providing as much as they can on the state level and on the federal level to all of their customers. There's, know that Intuit's doing something very similar from this standpoint, but you also need to ask those questions. Not only what resources are you providing to me, but what in-product tools and resources are you guys working on right now to be able to make it available for me to simplify this later? You got to make sure you're asking both parts of that question, not just thanks for the tools now, but what are you doing to make this available so that I don't have to do 57 steps later on down the line once this actually comes to fruition and is working out by individual state.
So that kind of got through what I wanted to in the bill. There's lots of other miscellaneous stuff in there. I'm just going to put it out there. There's so much else in this bill. There's benefits if you're paying student loans for your employees. There's depreciation changes. There's a whole list of additional changes in here that you may or may not think are relevant to economic stimulus and the point of the disaster. But that's definitely the things I wanted to get through. Would love to open it up and say, do you guys have anything else you want to touch on the bill? That's what I had that I wanted to get through for sure.
I think one of the things that's kind of interesting about this that is a consideration is what this looks like on the employee front. I know that, the phase 2 passed a couple of weeks ago, and there wasn't really a lot of talk about it, especially on the employee front. But with the passage of today's bill, there was a lot. I already got a lot of questions about the family leave and sick time. And I think one of the things that's going to be different about this is that, normally we have a lot of people that are self-isolating, that have family members or people that they live with that are currently experiencing symptoms, and this is a new change as well. And so the communication to the employees has to be, there has to be a lot more communication to the employees than ever before. And I think it's important that we as advisors provide that content to our employers, because otherwise we're just going to play a game of telephone, and that doesn't translate well. So one of the things that I'm trying to do right now is put together an explainer video for the employees that I can give to my employers so that they can give it to their employees so that they're getting the right information that they need in order to go and apply for unemployment, utilize the sick time correctly, know what the paid family leave is for and isn't for, and know all of this without people getting upset about it, because there's a lot going on right now.
Agreed. And that's, as accountants, well, and as small business owners, if your accountant's not reaching out to you on these things, take note. I'll just put it that way, right? But you need to be relying upon your advisors in this time, and that's what they're there for, right? That's why you have a relationship with them. Rely upon them at this time. Really look to them to provide you a lot of leadership in this time. And that's where you have to, because each and every situation is so different in this time. Different capitalization levels, different business models. I mean, there's just so many ways you can divide that business that the media messaging may not fit you, right? They're doing a generic messaging that your situation is likely very different than the generic situation. So respect that and move through there. And there's a lot of other things in this bill. There's the piece where they're sending a check to each individual. There's a lot of other things that we could look at in the future. Don't want these to go too long. Obviously, we are going to try to do these daily, looking at what the changes for that day are, giving some more advice, maybe diving a little deeper on some of these loans and giving some of that advice out, looking at other benefits, start talking about how we should be looking at our businesses going forward, the business model. What's the impact of this going to be on our customers long term? You know, is there a psychology change once everybody's stuck in their house for a month, right? Habits form in 21 days. What does that do to us as we come out of this as people, right? I think we'll get into a lot of different things, but we want to touch base with you guys each day and kind of just say, here's the updates from the day. Here's what we're seeing. We did not say where we all were from before, but I think each of us is from a different region in the United States right now. So, you know, we have a wide breadth in that of different experiences in different industries. So we're just trying to give you that information each and every day to kind of touch point.
Yeah, and like my only kind of final thoughts are this weekend, if you have nothing else better to do, I'm sure you're just going to be busy, especially if you're an advisor, an accountant. You know, be prepped. The first bill that was related to FMLA and goes into effect April 1st, April 2nd. I think it's one of those dates. If you haven't already prepared for the employees that will choose to take FMLA on starting that day, who have the right to take it because of childcare needs or because they feel like they need to, they're impacted by COVID-19 themselves or a family member, they need to take care of them. Make sure you plan as a business owner, though, for some employees that haven't told you yet that they plan to take it. Plan that they will tell you that will plan to tell you on the 1st or 2nd of April that they plan to take it, and what that might do to your service delivery or product delivery if you're still in business right now, if you're trying to do delivery. So especially if you're an accounting firm or any kind of service professional and you're still in business doing well, teleworking, well, you got employees with kids at home that would rather be watching those kids and focusing on those kids. They have the right to take it without any repercussions. So make the plan and make some scenario plans around your human labor differential when FMLA comes into effect around COVID-19. So that's kind of some advice. But looking forward to doing this next week as well, guys. Any other final thoughts?
I just had one. I think one of the things that, to kind of piggyback on what you just said, Michael, from the standpoint too, is these bills are really created around taking care of everybody. And I think that's one of the pieces that's most important from what I've taken away from this is that, and I've seen a lot of questions come across, you know, does this work for, you know, solopreneurs or people who are just a single member LLC, or is this only for people who have 50 or 100 or 500 employees? You know, what's my likelihood of being able to get any funding and things from that standpoint? And really the way that I'm seeing and reading a lot of this verbiage and communication is that all aspects should be available to no matter what entity type you are, no matter what entity size you are, no matter how many employees you have in that organization, of course, up to that max, because there's, you know, requirements from a federal standpoint that people are supposed to provide to other pieces. But even as a single member organization, there's still tools and resources that are available to you to be able to keep you open, to be able to keep your doors and be able to keep you in a space where also in the event something does happen, that you can take care of your family and not feel like you have to close your business because of it. And so thinking about that piece, I think, is super crucial and super important. And if you are in that space, make sure that you're looking for those resources. You know, of course, not all accountants will be watching this, and there'll be people who are working for other companies or, you know, however it means from that standpoint. But make sure that you know what's coming and available to you as well as an employee, like Michael said, to be able to take that time if you need it, to be able to utilize those resources as you go through it, so that you're not put in a position to where you have to sacrifice family versus your job, because the government's forcing you to allow you to have the opportunity to choose, which is great.
Chris, Amy, any last thoughts?
I just, this is just more of a end on a high note for me. I heard this morning that quick to listen, slow to speak. And we've all been digesting so much this week, and everybody wants to have an answer very quickly for your clients. I'm speaking to the accounting professionals and then also the business owners. You want to be able to tell your employees something. I think this has been going on long enough now. We can all take a deep breath, listen, figure out your plan, or take your time and articulate it. there's plenty of resources out there now to help you do that. And as accounting professionals, I think it's also okay to say, I don't know the answer, but I'll help you figure it out. Because this stuff, I mean, information you give somebody on Wednesday is stale by Friday. So be a problem solver and we'll all get through it together.
Well, great. Well, thank you guys. Looking forward to next week.
Same.